Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. For the first half of 2023, oil prices traded in a fairly tight range. Prices were volatile at times, but never experienced a sustained rally. That all changed near the end of June. Since then, the price of West Texas Intermediate crude oil has been gaining traction and climbing from a low of around $67 to roughly a high of $85 per barrel. West Texas crude oil has been increasing on the back of OPEC production cuts, growing optimism that a recession could be avoided, and the fact that U.S. administration has no good options for bringing down the price of gas. The downside risks are also limited as long as OPEC maintains its production levels. This has led some analysts to suggest that $100 per barrel oil is entirely possible. This sort of optimism in the energy market is great for companies operating in every stream of oil and gas industry, upstream, midstream, downstream, including today's income pick, Hess Midstream LP, traded on New York Stock Exchange under symbol HESM. John?
Yeah, thanks, Mo. Despite economic uncertainty that hampered the industry early in the year, Midstream continues to report strong financial results and is making so much money. It's actually raised its quarterly dividend for the last 27 consecutive quarters. The outlook for additional gains remains excellent, with management targeting at least 5% annual distribution growth for its common shares through 2025. Going forward, it expects to have more than $1 billion of financial flexibility through 2025 that can be used to support its return of capital framework, including potential additional and ongoing unit repurchases that could further support distribution per share level increases.
John, since you last wrote on Hess Midstream in late May, the company's stock has rallied about 15%, and the company has raised its quarterly distribution by 8% year over year. What does Hess Midstream do to justify the big gains it has seen so far?
Unlike most energy companies that generate their revenue from current oil and gas prices, more than 85% of Hess Midstream's revenues are actually protected by fixed fee minimum and volume commitments in 2023. This provides it with commodity price protection to gather, process, move, store, and export crude oil and natural gas in the prolific North Dakota Bakken shale region. As a result, its bottom line is not susceptible to fluctuations in commodity prices. It's basically a toll keeper that collects money whether its clients use its pipelines or not. Provides its strategic infrastructure assets, services to Hess Corp, actually, which is traded on the New York Stock Exchange under the symbol HES, and a number of global third-party companies. Its business model actually provides long-term resilient growth. For example, this includes minimum volume contract commitments, protecting it with minimum downside risk. Contracts are actually set on a rolling 3-year forward basis, send or pay. They cannot be adjusted downwards once set, and any shortfall payments are made quarterly. It also locks in its customers to long-term contracts, with the commercial contracts extending through actually 2033. Fees are set annually for all future years in the initial term to achieve contractual returns on capital deployed. On top of that, fees escalate each year at consumer price index. So basically, it's a win-win for Hess no matter what's happening with oil and gas prices, and it provides it with a reliable and growing cash flow base with opportunities to further grow its business.
And how's the business doing at this company?
Well, Hess delivered, in the words of the CEO, another quarter of strong operational and financial results. The second quarter revenue increased to $324 million. Net income came in at $147.9 million, or 50 cents per share. Net income attributable to Hess Midstream was up 14% at 50 cents per share. Adjusted EBITDA was $248 million. Distributable cash flow was $202.6 million, and adjusted free cash flow was around $154 million. It also reaffirmed strong guidance for 2023, and back in January, actually, it provided its return of capital framework through 2025. So that gives you, a feel for what's going on over the next 2 years. Hess Midstream LP continues to target at least 5% annual distribution growth per share through 2025. For 2024 and 2025, Hess expects net income and adjusted EBITDA to climb at least 10% per year, and adjusted free cash flow is expected to grow by greater than 10% on an annualized basis in both 2024 and 2025. That's more than sufficient to fully fund its targeted growing distribution.
And John, I assume this is great news for dividends and share prices here.
Thanks to strong cash flow generation, Hess Midstream has been able to raise its quarterly dividend every quarter since it went public in 2017. That means it's raised its quarterly dividend during the COVID pandemic, the worst economic period over the last 100 years. Most recently, this past July, Hess announced it increased its second quarter distribution almost 3% quarter over quarter. And as you noted earlier, it's slightly more than 8% year over year at 0.6011 per share, or $2.32 per share on an annual basis. And that works out to a current yield of 7.45%. And again, for comparison, inflation has been inching up lately and currently sits at 3.18%. And now, as for Hess Midstream stock, it's rebounded since we last wrote about it in late May. At the time, Hess stock was down 4% year to date and 8% year over year. Today, Hess Midstream stock is actually up 8.5% since the start of 2023, and it's up more than 10% over the last 12 months. Wall Street, of course, thinks that Hess is trading at a bargain, with analysts providing a 12-month share price target of between $35 per share to $37. For context, even the 35 target would put Hess Midstream at record levels.
John, thank you so much for your analysis. The energy sector was one of the biggest winners in 2021 and 2022. And while energy lagged in the first half of this year, it has actually been one of the best performing sector in S&P 500, up around 8% year to date, just slightly behind the technology sector, which is up close to 9%. With 4 months left in the year, energy could be the biggest winner again. Hess Midstream is well positioned to do well regardless. As noted previously, it has long-term contracts extending through 2033, 100% fee-based contracts, minimized commodity price exposure, minimum volume commitments are set on a 3-year rolling basis through 2025, providing downside risk protection. More than 85% of the revenues are protected by minimum value commitment in 2023. It doesn't really matter how the economy does this year or what the price of oil and gas is. Its cash flow is protected and growing. This explains how the company has been able to increase its distributions for the last 27 consecutive quarters and counting. That's it for today. We'll be back with another video soon. If you want to read about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.